Hey there, WeMasterTrade family. Welcome to an electrifying session where we take trading to the next level. I'm Aiden and I couldn't be more excited to have you all here. So whether you're a seasoned pro or just starting your journey, you're in the right place to sharpen your skills, expand your knowledge and supercharge your trading game. So drop a message in the chat, let us know what you're tuning in from, and don't forget to smash that like button if you're ready for an action-packed session. This community is built on passion, learning and growth, and today we're here to push the boundaries together. So we have an incredible lineup, including some of the sharpest minds in Forex and fund trading. You'll get insights about tested strategies and the kind of real-world wisdom that can transform the way that you trade. So get your notepads ready because today's session is going to be pure gold. Okay, now let's dive straight in. I'm thrilled to introduce our first guest, a trader who has been making serious waves in the Forex world. He's got a track record of precision, discipline and success. So please welcome Raf.
Hey Aiden, I'm pumped to be here. There's nothing better than connecting with the WeMasterTrade community and sharing the strategies that have shaped my journey. Trading is always evolving and I'm excited to dive into some of the approaches that have helped me stay ahead.
That's the energy we love, Rab, and trust me, we're all eager to hear your insights. But before we get into that, we've got another powerhouse in traders in the house. She's a strategic mastermind when it comes to fund trading and knows how to navigate the high-stake worlds of crypto and stocks like a pro. So let's give it up for Helen.
Hey Aiden, hey everyone, I'm super excited to be here. The discussion is always packed with a great takeaway, and today I can't wait to share some of techniques that have worked wonderful for me. Let's make some session and engaging and insightful as possible.
Love it, the energy is off the charts, and that's exactly what we need because today's session is all about unlocking the keys to success in trading. So Ralph and Helen will be sharing their journeys, breaking down their winning strategies and revealing how they handle market volatility like pros. So let's get straight to it. Ralph, you've been trading Forex for a while now and I know that it hasn't been a smooth ride. So can you take us back to the beginning? What sparked you to interest in Forex trading and how did you find your way to WeMasterTrade?
Great question, Silent. I got into Forex trading a couple years ago, drawn by its dynamic nature. Unlike traditional investments, Forex never sleeps. It's always on the move. That kind of energy pulled me in instantly. But what really changed the game for me was the discovering WeMasterTrade, their advanced tools, market insights, and most importantly, the strong community support made all the difference. Trading can be a solo journey, but when you have a network of like-minded traders backing you up, your learning curve skyrockets.
That's powerful, Rab. Having the right support system is a game changer, and WeMasterTrade really delivers on that front. Now, the Forex market is known for its ups and downs, but how do you stay focused and not let the volatility shake you?
It all comes down to risk management and discipline. You can't control the market, but you can control how you react to it. I stick to a solid risk management strategies, and WeMasterTrade's real-time analytics help me make informed decisions. I never let emotion take over. When you trust your system and your tools, you trade with confidence.
So absolutely, there's a gem right there. Trusting your systems is key. So now Helen, let's talk about fund trading. You've been crushing it with a long-term approach, and what made you choose fund trading, over other styles?
For me, it's all about sustainability. Fund trading isn't about chasing quick wins, it's about building something that lasts. Long-term strategies require patience, but the rewards are worth it. It's our fund trading apart in balancing short-term market movement with the long-term goals. WeMasterTrade depth analytics help me stay ahead of trends, ensuring I make informed choice without overreacting to the market noise.
So that's to whole different levels of discipline. So how do you stay cool when the market throws curveballs?
It's about the perspectives. Every market dip is an opportunity to discover. I don't let short-term fluctuation dictate my long-term plans. Plus, WeMasterTrade returns help me set parameters that keep me in control no matter how wide the market gets.
So that's exactly the mindset traders need to adopt. Whether it's all Forex or fund trading, having the right tools and strategies can make all the difference. And today we're getting a masterclass from Ralph and Helen, so buckle up because we're just getting started. Alright, so WeMasterTrade traders, it's time to level up as we delve into one of the most exciting aspects of our platform, the package comparison. So no matter where you are in your trading journey, finding the right package is key to maximizing your potential. So whether you're just getting starting, or are you looking to refine and evaluate your strategy, this segment is tailored just for you. So at WeMasterTrade, we know that every trader has their own approach, risk tolerance and growth trajectory, so that's why we don't believe in a one-size-fits-all model. Instead, we offer multiple flexible packages that cater to different trading styles and ambitions. So if you prefer a calculated, steady strategy, or you're here for high-risk, high-reward action, we have the perfect fit for you. So to break it all down, we've got two of our sharpest minds in the game, Ralph and Helen. Well, these two have worked closely with the WeMasterTrade package offerings and are here to give you the inside scoop on how to leverage each one for maximum results. So let's dive in. Ralph, you've been with WeMasterTrade for a while now, and I believe that you have seen firsthand how these packages transform a trader's experience. So can you kick things by explaining why the package comparison is such a game changer and how both new and beginners experienced traders can benefit from it?
Absolutely, Aiden. This is one of my favorite topics because understanding these packages is crucial to a trader's success. The package comparison tool makes it simple for traders to assess their options, compare key details like initial balance, profit targets, and risk parameter, and select the best package that aligns with their personal trading style.
So that sounds like a great option for traders who want stability and room for growth. But what about those who want to go bolder? I've heard the 5-10-10 package is a favorite among high-stake traders, Ralph. So can you break it down for us?
Oh, absolutely. The 5-10-10 package is all about taking calculated risks for bigger rewards. Like the standard package, it offers $200,000 initial balance. But here's the kicker, the profit target jumps to 10%. This package is designed for traders who have confidence in their strategies and are ready to push their limits. Plus, with a 5% daily loss cap, you have room to take bigger swings without excessive exposure. If you thrive in a high-risk, high-reward environment, this package is a game changer.
So that's serious about opportunity. A 10% profit target is huge for traders who are looking to scale fast. But what if someone wants a more relaxed approach without worrying about hitting specific targets? So Helen, I know that the 5-10-0 package is a tough choice for those who want freedom in their trading. So can you tell us more?
Absolutely, agents. The 5-10 package is perfect for the trader who want flexibility without pressure. It comes with 100,000 initial balance, but the bad part, there's no profit targets. That means you can focus fully on your strategy without feeling forced to hit percentage milestone. With a 5% daily loss cap, you still have a risk progression you need to while enjoy a more open-ended trading experience. It's ideal for the trader who want to experiment, fine-tune their approach, or simply trade with more breathing.
So that's an amazing option for those who like trading without constraints. But I also hear some traders, want control without sacrificing high stakes. So Helen, could you walk us through the 5-10-10 no PC package?
Of course, the 5-10-10 no PC package is a race balance between the structure and flexibility. You start with the 200,000, just like the standard 5-10-10, and you still get 5% daily loss cap. But the key difference here is the customization. It allows the trader to tweak their risk parameter and adapt to market conditions in real time. If you like adjusting your approach as you go, this package gives you a freedom to do just that while maintaining structural risk management.
So now that's what I call smart trading, adapting without losing control. And finally, for those who want it all, let's talk about the custom package. Rob, tell us why this package stands out from others.
Well, this one is next level. The custom package is for traders who want complete control over their experience. You start with a jaw-dropping 1 million balance. Yes, 1 million. But the real magic is in the customization. You can set your daily loss limit, profit targets, and overall risk parameters based on your own trading strategies. It's perfect for seasoned traders who know exactly what they want and want the freedom to build their own optimal trading conditions.
So, $1 million starting balance and full customization, I believe that's the ultimate dream package for serious trader. Whether you're just starting with the standard package, pushing limits with the 5-10-10, or enjoying unrestricted trading with 5-10-0, or just staying flexible with the 5-10-10 new PC, or going full custom with the 1 million pallet balance, WeMasterTrade has the perfect trading package for you. So traders, head over to the package comparison section on our website and explore these options for yourself. Drop your favorite package in the chat and we get you get started on your next big trading move. So the features is in your hand. Let's make it happen. So traders, this is where the real mastery begins. We've covered the trading packages, but having the right plan isn't enough. So all you need to know is how to navigate the rules that shape your success. So at WeMasterTrade, our risk management conditions aren't just guidelines. They're designed to protect you from major pitfalls, like sharpening your trading discipline. So no matter where you are in your trading journey, whether you're just getting started or already making waves, understand these key limits will make the difference between longevity and burnout. So let's dive into the crucial rules that govern risk in our ecosystem. So first on the list, the daily loss limits. So Rob, you've seen the ups and downs. So can you explain to everybody how the daily loss limit works and why it's so crucial for long-term trading success?
Absolutely, Aiden. The daily loss limit is one of the most important safeguards for traders. It acts like a daily circuit breaker, preventing traders from taking excessive losses in a single section. It's simple. Every day your account has a maximum allowable loss before trading is halted. This is determined by the greater true values, your account balance or your equity at the start of the trading day. So let me break it down with a couple of examples. The first one, if your balance is $105,000 but your equity starts the day at $107,000 and you are working with a 4% daily loss limit, you can lose up to $4,000 before hitting your threshold. If your equity dips below $103,000, your trading is paused for the rest of the day. And for the second example, if your balance is $100,000 but your equity starts at $99,000, the 4% loss limit would mean a cap at $96,000. Once your equity drops to that point, trading is halted. The daily loss limit ensures that a bad day doesn't become a catastrophic one. It's about keeping your capital intact so you can return with a clear strategy the next day.
So that makes so much sense. It's like an emergency brake to stop you traders from going overboard. But what happens if a trader accidentally crosses that limit? So can they keep trading?
Great question, Silent. And no, once you breach the daily loss limit, your account is automatically liquidated. All open positions are closed instantly and trading is disabled until the next day or until you purchase a new package. And here's something to keep in mind: because of market volatility, you might end up slightly over the limit due to price fluctuations. That's why staying aware of your losses is key.
Yikes, so it's a strict line traders shouldn't cross. So now let's talk about how to avoid hitting that limit. Helen, you've navigated the markets for a long time, so what are some strategy traders can use to stay within their daily loss limit?
Absolutely, agents avoiding a daily loss limit come down to discipline and smart risk management. Here are my top strategies. The first, use a stop loss on every trade. If you're staging us, the stop loss ensures that if the market moves against you, you automatically protect before the small loss turn into the disaster.
So let's say having a guardrails on a highway, it keeps you from veering off a cliff.
Exactly. The second strategy is the position sizing. Too many traders go on one trade, which risky. A good rule of thumb: never risk more than 1 to 2% of your balance on a single trade. That's why even if you hit a lot, you still have a room to recover without hitting your limit.
So it's like spreading your bets rather than going all in on one move. So that makes total sense. What about, when traders feel emotional and try to chase their losses?
That's a huge mistake. My third tips: never chase losses. If you had a tough day, step back. The market will still be here tomorrow. Emotional trading often leads you the restless decisions that make the losses even worse. The smartest trader knows when to stop.
So true. So it's like trying to sprint when you're already exhausted. You're bound to make mistakes. Now, Helen, staying mentally strong seems just as important as having the right strategy. So how do traders keep their emotion in check?
On my side, in averaging agents, trading is as much about psychology as it is about numbers. Always start with a trading plan, so that's when the market throws the price. You're not making impulsive decisions, and if you find yourself getting emotional, walk away, reset, come back with a clear head.
That's goal, Helen. Now we'll cover the daily loss limit, but let's go to another critical risk factor, the maximum loss limit. So unlike the daily loss limit, which resets daily, the maximum loss limit is cumulative. So once you hit it, your account is locked. So Ralph, can you explain how this rule works and why it's so important?
Of course, Aidan. The maximum loss limit is your long-term safety net, while the daily loss limit protects you from a bad trading day. The maximum loss limit ensures you don't drain your entire account over time. Here's how it works. If your account starts with 50,000, the maximum loss limit might be set as 94% of that value. That means if your equity falls to 47,000, your account will be locked. But here's where it gets interesting. If your balance grows, so does your loss limit. Say your account rises to 52,000. Now, instead of being locked at 47,000, your limit adjusts, giving you a little more flexibility.
So it's like a buffer that adapts you to your success. But what happens when traders ignore this rule and hit their maximum loss limit?
Well, if your equity falls to your maximum loss limit, the system automatically locks your account, closes on trades, and stops you from trading further. To continue, you need to purchase a new package.
So that's a secret safeguard, Helen. So what's the most common mistake traders make when it comes to managing their maximum loss limit, and how can they avoid it?
The biggest mistake: not tracking cumulative losses. Traders get so focused on the daily game that they forget about their long-term exposures. Here what I recommend. The first one, use stop loss order on every trade. This prevents you from getting low to danger zone. The next one, manage position size wisely. Don't risk too much on one trade. The next one, monitor your equity. Keep an eye on your dashboard. So you always know where you stand. To the next, stick for a trading plan. Having a predefined rules prevent emotional decision making. And the last one, review your strategy regularly. If you are constantly nearing your maximum loss limits, it's time to reassess your approach.
So that's solid advice, Helen. The best traders aren't just focused on making profit, they also masters of protecting their capital. So traders, that was a deep dive into the daily loss and maximum loss limit. Understanding these rules is key to staying in the game long term. So thank you for the fantastic breakdown of the maximum loss limit, Ralph and Helen. So this leads us perfectly into our next key topic, the profit consistency rule. So this rule is essential for ensuring long-term sustainable success in trading, as it helps measure and maintain consistency in your profit. So now, to give us a clearer picture of how the profit consistency rule works and why it's important to us, let's turn to Ralph. So Ralph, can you break the rule down for us and how it is calculated and why it is such important for traders to focus on their consistency rather than just aiming for big wins?
Of course, Alan, the profit consistency rule is a powerful metric that helps traders understand the stability of their profits over time. Not just about landing one or two big wins, it's about maintaining a steady stream of gains across multiple trading days. So here's how the profit consistency rule is calculated. You take your highest single day of profit and divide by the sum of your profits and losses over a given period, typically a month or a quarter. This ratio is then expressed as a percentage. For example, if your best trading day yielded $200 in profit, and over the course of a month, your total profits and losses sum up to $410, then your profit consistency ratio would be approximately 48.7%. Ideally, you want this percentage to be below 20%. This means that your profitability is spread over time rather than concentrated in a few lucky trades. Now, why is this important? A low profit consistency ratio indicates that a trader isn't overly reliant on one or two profitable days. Instead, they demonstrate stable strategies that work consistently across various market conditions. This consistency is a key characteristic of long-term success in trading.
So that's a great explanation, Ralph. So just to clarify, a lower ratio means that you're more likely to make steady gains rather than relying on just a few big wins, right?
Exactly, Aidan. If a trader's profitability is tied to just one or two big wins, it often suggests risky or inconsistent strategies. The goal is to smooth out profits over time so that even on slower days, you are still maintaining a steady upward trajectory.
So that is incredibly insightful, and it seems like a critical metric for any trader who's serious about long-term success, right?
Absolutely. Consistency is the foundation of sustainable profitability. It's great to have big wins, but if they follow up by large losses or extended break-even period, it's hard to sustain momentum. The profit consistency rules ensure that traders focus on steady growth rather than sporadic gains.
Awesome. So now that we understand the profit consistency rule, let's get into some practical strategies to help traders maintain a low ratio, easily under 20%. So Helen, I know that you have some great insights here. So can you share some techniques that traders can use to stay consistent and keep the ratio in check?
Absolutely, agents. The profit consistency ratio is powerful indicators, but maintaining a low ratio requires disciplined trading and proper strategies. Here are the few ways traders can improve their consistency and avoid relying too heavily on the last win. For the first one, diversify your trades. One of the best ways to stabilize your profit consistency is by diversifying your trades across different assets and markets. If you trade only one market, like Forex or stock, you expose yourself to more volatility. By spreading trades across multiple markets, you reduce the impact of single market fluctuation and create a more balanced performance.
If that makes sense, so if I only trade US, so I bet we could really seriously impact my ratio, but by adding commodities or Forex trades, I could balance out that risk, right?
Exactly, by diversifying, you ensure that no single bad trade or market downturn wipes out your gains. For the next point, demanding position sizing. Over leveraging is a common mistake. Traders who risk too much on a single trade often experience huge fluctuation in their performance. Instead, aim to keep risk level stable by not exceeding 1 to 2% of your account balance on any single trade. This minimizes losses and help maintain consistency.
So it's all about making sure that you don't put too much of your capital at risk on one trade, so keeping things controlled and stable.
Exactly, smaller controlled trade lead to the steadier profits over time. For the next point, follow a clear trading plan. Have a structured trading plan, keep emotions out of the equation. Define your entry and exit strategies, risk tolerance, and overall profit targets. A clear plan ensures that you're making a calculated decisions rather than impulsive ones.
So that makes a lot of sense. Without a plan, traders might jump into trades emotionally, which can lead to inconsistent results, right?
Absolutely, a solid plan keeps a trader focused and prevent emotional decision making that could lead to erratic profitability. Use stop-loss order. Stop-loss order help trader lock in profit and minimize excessive losses. By having a predefined stop level, trader can prevent last draw that can negatively impact their profit consistency ratio.
So I love that. Stop losses take a lot of the emotion out of trading since the system automatically manages risk.
Exactly, ensure that you maintain discipline even in the fast-moving markets. For the next point, regularly review performance. Traders should consistently analyze their performance metrics to identify areas of improvement. Reviewing trades help traders adjust strategies, ensure that maintain consistent profit over time.
So that's like regularly tuning up a car, making sure it's running smoothly so you don't get hit with surprises down the road.
Exactly. A well-maintained trading strategy is a key to long-term success, and the finals to avoid emotional trading. Emotional trading can destroy consistency, whether it's tracing losses or getting overconfident after the big win. Emotion often lead to reckless decision making. Sticking to a plan and keeping emotions in check is crucial to steady profits.
So that's such an important point, staying calm even when the market is volatile.
It's easier said than done, but controlling emotions is one of the most crucial skills a trader can develop.
So great insights, Helen. Traders, keep these strategies in mind as you work toward building consistency in your profits. Now let's move on to another crucial component of risk management, the risk consistency rule. So this rule helps traders maintain discipline, risk exposure, and avoid erratic decision making. So Helen, could you walk us through what the risk consistency rule is and why it's so vital for traders?
Absolutely, Aiden. The reconsistency rule is designed to ensure that traders approach risk in a measured, disciplined way rather than making impulsive, high-risk trades. The idea here is that every trade should carry a consistent level of risk, avoiding major swings of approach that could choose bad die on a scale. The rule works like this. Your risk per trade should remain stable across your trading activity. If a trader typically risks 1% of their account per trade, you shouldn't suddenly increase that risk to 5% on a single position just because they feel confident about it. This kind of inconsistency is what leads to major drawdown and disturb long-term profitability. To put it simply, the reconsistency rule prevents traders from overexposing themselves to individual trader and promotes steady measured growth. It's about the sustainability rather than short-term gambling.
So that makes a lot of sense, Helen. So let's say a trader is normally risking 2% per trade. If they certainly risk 6% on one trade, they're breaking this rule, right?
Exactly, agents. That kind of inconsistency is dangerous. A trader might get lucky and win, but if the trade goes wrong, they take an oversized loss, that could set them back significantly. By maintaining consistency risk per trade, you reduce likelihood of emotional trading and improve your ability to sustain profit over time.
So, got it. So consistency in risk management is just as important as consistency in profit making. So what are some practical strategy traders can use to ensure that they stay within the risk consistency rule?
Great question, Aidens. Here are some of the best ways to maintain risk consistency. For the first one, a set of fixed risk percentage per trade. Decide in advance how much you're willing to risk on each trade, whether it's 1%, 2%, or another fixed amount. One you determine this, stick to it regardless how confident you feel about the particular setup.
So if I choose to risk 1.5% per trade, I should never certainly increase it to 4% just because I think I see a short win.
Exactly. Even if you feel strongly about a trade, consistency is a key. Dividing from your set risk level is a sign of the emotion trading, which often leads to losses. Use position sizing to control risk. Instead of adjusting risk exposure by changing trade size, ability type, use position sizing strategy to ensure a trade follows your preset risk percentage. This way, no trade is disproportionately large compared to others. Track your risk exposure across multiple trades. If you are running multiple trades at the same time, be aware of your total risk exposure. Even if each trade follows your risk percentage rule individually, however, too many trades open as one can accumulate excessive risk.
So even if each trade follows the 2% rule, having the 10 open trades at once could still put me in trouble.
Exactly. Traders often overlook the total exposure of multiple similar term positions. It's important to monitor your overall risk than just individual trades. Avoid revenge trading after a loss. One of the biggest mistakes traders make is with their risk after the losing streak to try and make it back. This often results in even greater losses. Instead, stick your consistent risk level no matter what.
So, alright traders, we covered two of the most important rules in trading: profit consistency and risk consistency rules. So next up we're going to enter a short break, and after that we are going to continue with the promotion plan that we're currently running, and today, economic analysis.
Trade. copy trade. Copy trade.
So welcome back everybody, and we have had fantastic discussion so far. So let's keep these principles in mind, which set you on the path of consistency and longevity in the market. So now let's quickly to and talk about something that can accelerate your trading success. Our latest promotions and opportunities available exclusively on WeMasterTrade. So at WeMasterTrade, our goal is to empower traders at every level by providing tools, insights and innovative promotions that help you maximize your potential. Whether you're new to the platform or a seasoned pro, we've designed these offerings with you in mind, so let's dive in.
Absolutely, I think we are excited to introduce the AB0 package, a unique opportunity specifically designed for our WeMasterTrade affiliate partners. This package gives traders an incredible entry point with minimal financial commitment. while still gaining access to a substantial trading balance. Here's what you need to know about the AB0 package. The cost is just $3 and the category is 510. You will start with an initial balance of up to $30,000. And for the eligibility, traders must complete the KYC verifications and enroll in our affiliate partner program. For the profit sharing, earning up to 50% of your profits. For example, if you make a 10% return, which is $3,000, your take-home share could be up to $1,500. And for the multiple purchases, you can acquire as many packages as you like, but only one can be active at a time. After closing an account, you can purchase a new package. So this package is a great way to experiment the WeMasterTrade platform with a generous balance while minimizing your initial investment. It's perfect for those who want to test the water and start building their trading journey with minimal risk.
So that's an incredible offer, Raf, and now let's move on to one of our most sought after promotions, the BOGO Omega's buy one get one free offer. So this is a game changer for traders who want to maximize their capital at no extra cost. So Helen, can you walk us through how this offer works?
Absolutely, Aidan. The BOGO offer is designed for the traders looking to advance their capital instantly. Here's how it works. When you purchase a $50,000 trading account, you will receive an additional $25,000 account, completely free. Instant funding, no waiting period. Your account will be funded right away, so you can start trading immediately. Risk management benefits. These promotions include a 4% daily drawdown limit, or 6% maximum.
So to claim your BOGO offer, you need to follow these simple steps. So first you need to log into your account and purchase any package with a minimum payment of $175. So next up is to sign the online contract for the account that you purchased. So the first step is to contact your customer service team to verify your payment and activate your free bonus account. And once approved, your bonus account will appear in the personalized section in your dashboard within 24 hours. So with simply log in, activate your account, and you're all set to start trading. So this is an incredible way for traders to gain extra leverage and increase their market exposure. Now let's hear from our traders. Raf, how do you think these promotions can help traders maximize their experience on WeMasterTrade?
That's a great question, Aidan. Both of these promotions are tailored for different types of traders, but they share one goal: helping traders scale effectively while managing risk. For example, the AB0 package is ideal for those new to the platform or traders interested in our affiliate program. It allows traders to engage with WeMasterTrade while keeping their initial investment low. On the other hand, the BOGO offers is a perfect fit for traders who want to increase their trading capital without additional investment. By receiving a second account for free, traders can test different strategies, edge positions, or simply expand their opportunity within the market.
So it's clear these promotions are offer traders incredible opportunities to level up their trading game. So remember, traders, these offers are available for a limited time, so make sure to take advantage of them while they last. And if you have any questions, don't hesitate to reach out to our customer service team for guidance. So we've had an amazing discussion so far, but it's time to introduce something truly special, the WeMasterTrade Challenge Packet. So if you looking to prove your trading skills, earn real capitals, and take home up to 90% of the profits, so then this is for you.
That's right, Alan. The challenge package is designed to help traders define their skills and get funded while following a structured, risk-managed approach. It's accessible to everyone, whether you are beginners looking to gain experience or unexperienced traders ready to level up. Here's how it works. You start by trading with virtual funds in a simulated environment from the MT5 platform. This gives you a real market experience without the risk of losing your money. You will need to meet certain performance targets across 2 phases before you get access to the real trading capital.
So that's what makes a challenge package so powerful. It's designed to test and build discipline while allowing traders to prove their probability. So Ralph, could you break down the account options available for joining the challenge?
Of course, the challenge packets offer various account sizes ranging from at least $5,000 to up to $100,000, so traders can choose the level that fits their comfort zone. Whether you are experimenting with strategies or aiming for higher stakes, there's an account size for you. Plus, as you progress, you can scale up your account, giving you the greater trading potential. The challenge simulates real-world conditions, ensuring that traders are truly prepared for the market.
And the way the challenge is structured makes it even more exciting. It's broken into two key phases. For the first phase, this day focuses on discipline and consistency. Traders must demonstrate their ability to follow risk management rules while achieving profitability. There are daily drawdown limits, maximum lot rejection, and profit target designed to encourage sustainable trading habit. For the second phase, in this phase, the criteria become slightly more relaxed, but the goal remains the same, provide that you can generate consistent profits while maintaining responsible risk management. This day is designed to ensure that traders are ready to handle real capital effectively.
So here comes the most exciting part. So one trader successfully completed both phases. They are granted access to real capital. So the best part, keep 90% of the profits that you generated. So that's an industry-leading profit split that rewards traders for their skills and discipline.
That's right, Alan. The challenge package is more than just an opportunity to trade. It's an educational experience. Traders learn key principles about risk management, trading psychology, and strategy execution, all of which are crucial for long-term success.
So now let's talk about these standout features that set the challenge apart. So Ralph, could you tell us about the trading instruments available?
Absolutely. One of the best parts of this challenge is the wide range of instruments you can trade, with access to over 300 symbols, including Forex, stock, and cryptocurrencies. Traders have the flexibility to apply different strategies and diversify their portfolios. This variety ensures that no matter your trading style, you'll find opportunity to succeed.
And speaking of strategies, there are no limitations on trading methods. Whether you prefer scalping, swing trading, automatic strategies, or even new trading, the challenge package allows for complete flexibility. Traders can stick to their strengths while also testing out new approach in the supportive environment.
So that's incredible. Ralph and Helen, whether traders are looking to refine their skill, prove their profitability, or fast-track their funding, the challenge package is a perfect gateway to success. So next up, we're going to enter the economic analysis of today's calendar.
Well, for the first calendar news, the GBP construction PMI. For the data, the figure is 53.5, while the previous figure is 53.3. For the impact analysis, the construction PMI, or the Purchasing Management Index, is a leading indicator of business activity in the UK construction sector. A reading above 50 indicates expansions, while below 50 signals constructions. The actual figures, 53.5, is slightly higher than the previous one, suggesting a minor improvement in the construction sector. However, it is not the most crucial PMI for the UK economy. Services PMI hold greater weight. Implications: financial markets are better than expected. PMI might provide mild support for GBP, but is unlikely to cause significant movements unless it strongly deviates from expectations. For investors, construction-related stock and real estate firms might experience some positive sentiment, but overall market movement will depend on other major macroeconomic factors. Traders short-term volatility in GBP pairs may occur, but the impact is typically limited unless it significantly beats or misses expectations. And finally, for economists, this data provides insight into trends in the UK construction industry, contributing to broader economic forecast. For the second event, the GBP Bank of England's monetary policy announcements. The Bank of England's monetary policy report, monetary policy summary, and NBC official bank rates. For the impact analysis, this report and decision are among the most significant events for the British pound. For the NBC official bank rate vote, the shift from 0.36 to 0.81 suggests that there is now a stronger consensus in favor of maintaining the current rate, reducing expectations of further rate hikes. For official bank rates, the reduction from 4.75% to 4.5% signals a potential shift toward a more accommodative monetary policy, which could weaken the GBP. And the implication for financial markets: if the POA signals a dovish stance, which is easing monetary policy, GBP would weaken. If they remain hawkish, concerned about inflation, GBP might hold steady or strengthen. UK stock indices may react positively to rate cuts as they reduce borrowing costs for business. And for investors, bond yield may decline, leading to higher bond prices. And for stock in interest rate sensitive sectors such as real estate and utility could benefit. For traders, GBP pairs, for example, the GBP USD or Euro GBP, could experience significant volatility, especially during the POE press conference. And finally, for the economists, this policy decision provides insight into the POA inflation and economic growth outlook. That's all about today's calendar.
Thank you, Ralph, for such an in-depth analysis of today's economic calendar, and thank you all to our clients for joining us today. It's been such an absolute pleasure sharing insights and connecting with such an enthusiastic audience. So we hope that you found the session valuable and inspiring. So don't forget to follow us, like this session, and share it with who might be benefit from it. So until next time, happy trading and stay motivated. We look forward to seeing you in our next session. Take care and have a wonderful day.
Copy Trade.